You're with us here on a fresh new edition of Closing Bell, the last hour of trade coming up. We are coming to you live from the CNBC-TV18 Motilal Oswal studios. I'm Prashant, with me, my colleague Surbi and Nigel. The market's not looking all that great. We're down about 140 points. Guys, hi afternoon.
Good afternoon, gentlemen. And I guess for the bulls, not such a great day because it's been down from the word go. And it's another slam dunk, given that yesterday was a weekday as well. So it's been two kind of tough days for the bulls on the trot.
I mean, 3 days now, right? The market's not been telling us. It's basically deferred at all-time highs day before yesterday. Yesterday was, a bit of a pullback, bit of a correction. And today we have a follow-up. So this is the question that I was putting out in the morning, whether, what we saw yesterday was just a nervous shakeout, which then, happens and then the market comes right back, or this is something more. As of yesterday, the market did close by just 10 points below the rising channel. So I didn't want to make a big fuss of it, and I would still not. But the fact is we're down once again with a 0.9% cut, respectively, on the Nifty and the Bank Nifty both. So, banks actually outperformed the Bank Nifty, but today they are underperforming. Broadly, the cuts are in the similar kind of zone at this point. Market breadth is negative. Not by a huge margin. Small cap index is still in the green, so there is enough happening on the upside. The global cues are soft. All the US futures are a little higher by about 0.25% or so after yesterday's 0.75% cut on the S&P. And on the Nifty, if you want to look at levels where perhaps supports come in, I think it's the 20-day moving average, which the market's getting too close to very rapidly. That stands at 18,052 now. So that's the 20-day on the Nifty. On the Bank Nifty, the lower end of the Bollinger Band, that is gone with today's cut. So we'll see. Let's see the close today. Is there any kind of respite, some recovery? And then we'll put out fresh levels a little later, maybe tomorrow morning. But it's, once again, a poor session with the profit booking, which is starting to come through. So it's almost as if, the market is reacting to that Karnataka state election 2 days later.
2 days later.
And they still don't have a CM.
Oh, gosh, that's true. So there's that one maybe late reaction that's coming in. But also, as you pointed out, global cues aren't the best today. We've had, actually, some of the Asian markets were down almost 1.5–2%. Hong Kong market was down 2%. Europe is a little better off right now. Some of the markets are trying to recover from their opening lows. But nonetheless, the cues are pretty somber around the world as well. Just want to quickly point out the movers and shakers here. The problem for the bulls is that there is absolutely nothing to counter the negative onslaught today. And negative sectors include banks, metals, and IT. Between these three, bulls are pretty much over and done. Let's pull up the Bank Nifty to begin with, because that's where there's a lot of sort of stress coming in. That index is down more than the Nifty. We'll pull up the constituents, and almost all of them, barring an IndusInd bank, there you go. IndusInd is on the right side, on the left side of the screen. Everything else is on the right. There's a lot of pressure on frontline banking. Then you have the global-facing sectors, both metals, which are lower, stocks like Tisco, as well as Hindalco. Most of them are down. IT is down, and IT was down from the word go. Infosys, TCS, HCL Tech, you name it. All your frontline technology is lower. And the big boys beyond these three sectors, they're not helping matters much. So whether you're looking at a Reliance or an L&T, or if you were expecting, any sort of help and support from, let's say, Hindustan Unilever, none of that is coming. So the big boys are also sitting out on the downside today. The only counter, if you could call it that, some buying in select auto names. But other than that, it's been down, out and out. And Nigel, now the advanced decline ratio, the lines are only widening. Today is not a day where mid-caps have had a tremendous run. Yes, the index relatively is still better off than the Nifty, but even broader markets, I think it's been a little lackluster today.
Well, that's right. So the only glimmer of hope is that 18,150 mark. On a closing basis, you'll want that level to get defended. So let's pull that up. Intraday, we went down all the way to around 18,115. And then we have bounced back a little bit. What's giving you some bit of a hope is the Nifty Bank, because that went down to around that 43,400 odd mark, and it bounced off that mark. So you'd like it to hold on to these levels. Intraday, it went down to around 43,420 or thereabouts, and from there we've seen a bit of a bounce. So on a closing basis, the bulls will at least want to defend 18,150 on the Nifty, and on the Nifty Bank, 43,400, and that's the level I'm looking at, because yesterday there was some writing at around the 43,500 put. Let's see how the last 60 minutes goes, whether or not the bulls can fight back or the bears will go home with all the glory. First up, let's run you through what we have lined up on the show for you. A whole host of stocks are reacting to their Q4 numbers. LIC Housing Finance is under some pressure on the back of a mixed set. electronics manufacturer companies like Amber Enterprises as well as Keynes Technologies, both of them surging on strong numbers. A complete earnings fine print coming up on the show.
Now, from tomorrow's list of earnings, we'll put the spotlight on the two biggies, SBI and ITC. They'll be reporting numbers, and we get you all of the key expectations.
We'll also discuss the portfolio with our Alpha Manager of the Day, Harish Krishnan of Kotak AMC. All this and more in the next 60 minutes.
Okay, all right. So there's a lineup here in terms of what you will see. The market's still down 130, 132 points. Rahul.